Stocks, bonds, real estate, or Bitcoin. Which one is the best investment right now in Poland? The answer might surprise you. In this video, we'll cover pros and cons of each and compare them potential returns. Hello everyone, I'm Piotr, and on this channel we talk about investing and personal finance. If you want to make smart and financial decisions, you are in the right place. Now, let's dive in. And we start with the big one, stocks. Stocks are solid long-term choice for outperforming inflation. They offer high liquidity and a low entry cost, as you can easily start investing even with amounts like $20. By opening a brokerage account in Poland, investors gain access to global investment opportunities, which is very important to not be limited only to a local market. My preferred way to invest in stocks is through ETFs, which makes it incredibly easy to own a diversified basket of stocks from around the globe. If you are not familiar with ETFs, be sure to subscribe to this channel, as I will be covering them in details in the upcoming episodes. However, investing in stocks comes with a risk, especially in the short term. Individual stocks can go to zero if a company goes bankrupt. While investing in a diversified basket of stocks helps mitigate risk, it's important to remember that during economic crises, entire stock indexes can drop by more than 50% in short period. For example, Great Financial Crisis. From October 2007 to March 2009, the market crashed by over 55%. COVID-19 pandemic. In just 1 month, the S&P 500 lost 30% of its value. While short-term risks are high, history shows that markets tend to recover and grow over time. When we zoom out and look at the bigger picture, those crises become barely noticeable. The S&P 500, despite experiencing major downturns, has gained an astonishing 680% from 2004 to February 2025. Next on our list, bonds. By buying a bond, you are ultimately lending money to a company or a government which issues that bond. At the maturity of the bond, the issuer is mandated to give you back the bond principal amount plus interest, which is your net gain. Bonds are usually considered a safe investment, especially government bonds, like the US Treasuries, which are often called a safe haven asset. However, there is a catch. Bonds usually available for individual investors are traded on the exchange, and their price moves up and down based on current economic conditions. Long-term bonds are the most volatile. In the chart you see a price of 20 years US Treasury bonds ETF. From August 2020 to October 2023, its price dropped by almost 50%. It doesn't look like a safe investment to me. Why might bond prices be shifting so much? This is a discussion for another video. If you want to learn more, leave a comment down below. I'll make sure to cover this in the future. Investors looking for a safer options should consider short-term bonds, often called treasury bills. Those, however, offer much lower potential return, often lower than inflation. Are there any bonds which offer a decent returns and at the same time investor is not exposed to price volatility? Yes. My favorite bonds are the Polish treasury bonds offered to retail investors. They offer better returns than bank deposits. The inflation-adjusted options are especially interesting as their interest rates are tied to CPI with a margin on top, typically 2%. Polish Treasury offers values bonds with maturities ranging from 3 months to 10 years. Even with the long-term bonds, it's important to note that investors can redeem their money at any time for a just small fee, making them a good option for those uncertain whether they hold until maturity. On the flip side, over the long term, those bonds tend to offer lower returns compared to assets like stocks. Additionally, the investment is limited to Polish zloty, which might make some investors uncomfortable with holding too much of their wealth in the single currency. Next on the list, real estate. In Poland, the most popular form of real estate investing are rental apartments. Historically, property values around the world have kept up with inflation and often slightly outpaced it. What makes rental properties even more appealing is the rental income they generate. In the table you see the average net return of investment in 17 major Polish cities in 2024 based on the 12-month rent they generate. The average net return of investment is 4.64%, meaning purchasing an apartment worth $500,000 zloty could generate approximately 23,000 zloty in annual rental income. If you add the price appreciation of the apartment, we can generate really decent returns. However, real estate investing comes with some downsides. High entry cost. Buying property requires a large upfront investment. Time-consuming management, finding tenants, handling maintenance, and dealing with paperwork can be demanding. Low liquidity. Selling the property depends on the market conditions. In the best cases, it might take a few weeks to find a buyer, but in slower markets, even a year might not be enough. And finally, Bitcoin. For some, Bitcoin remains a controversial investment, as it was once widely used for illegal transactions on the dark web. However, in recent years, law enforcement agencies have developed methods to track Bitcoin transactions, massively reducing illicit activity. Today, Bitcoin has gained widespread recognition as an investment asset across the globe. Even major asset management firms like BlackRock or Fidelity now offer Bitcoin investment options for their clients. Moreover, recently, Donald Trump signed an executive order to establish the U.S. Strategic Bitcoin Reserve, further providing that Bitcoin is no longer just a niche asset used by outliers. On the flip side, Bitcoin remains a high-risk asset class with extreme volatility. During bear markets, it has repeatedly dropped 80% or more within a year. These drops, though, don't change the fact that Bitcoin remains the fastest-growing asset of the past decade. Its price surged from around $800 per BTC in 2014 to over $100,000 in 2025. Now, I don't expect Bitcoin to grow another 100x in the next 10 years. However, it still holds potential to outperform traditional assets. Okay, which investment wins? To answer this question, let's look at the table in which I compared the various investments side by side. If we look only at the price appreciation, the undisputed winners are American stocks. $100 invested in them in 2006 would be worth $535 in 2024. If investors decided to invest in the same stocks using Polish zloty, the return would be also massive, and in 2024, the value of 100 zloty investment would grow to 666. Rental apartment comes next with a great returns as well. Polish inflation-adjusted bonds and US aggregate bonds are next on the list with a decent returns. 100 invested in them would generate $184 and $170 respectively. Investors who in 2006 allocated capital in Polish stock market might not be so happy, as despite Poland experiencing major economic growth over this time, the Polish largest 20 companies have been lagging behind, with returns not much different than cumulative inflation in the same time. Bitcoin was not added to the table as it's off the charts. I mean literally off the charts, since it didn't even exist in 2006. So which investment do you like the most? Leave the comment down below with your favorite one. If you don't want to miss upcoming episode in which I will be covering those asset classes in details, click that subscribe button. Thanks for watching, I'm Piotr from MyInvest and I see you in the next one.